Good morning. This is Meir Valensky with Driving Markets. China. I've been stating over and over again on these YouTube broadcasts and on my media publications that China is what saved the global Western economies back in 2009, 10, 11, 12 by huge imports, huge demand, buying up all of the raw materials, whether they were metals or whether they were infrastructure or whether the semiconductor chips. They saved the Western economies back in 2009, 10, 11, 12 onwards, all the way through to pre-COVID. And China is what's going to drive the markets down. China's overall industrial production, its manufacturing production, its retail sales are all down. It's in a deflationary mode, and I can't emphasize enough that China is what's going to be the actual catalyst to putting the Western economies into recession. China is at presently the number 2 economy, probably going to be surpassed by India very shortly, but at the moment it's the number 2 global powerhouse. Now, if China goes down, the West is going to go down with it. And if you look at overall numbers on China, you've got GDP running at around about the 5.5, 5.3%, but it's on a decline, not on an incline. And therefore, that is a worrying sign that overall gross domestic product, or the growth of Chinese economy, is declining. Even though it's still positive, it is declining. The youth unemployment is at super all-time highs, to the degree that the Chinese authorities now are not going to report the number on youth unemployment. In other words, they're going to hide the number from the West and from economic statistics. It's so bad that the Chinese don't want to be seen as a failing authority, a failing administration, a failing communist regime. Remember, the Chinese look upon their model as the global model. So they want to make out through their lies and through their fake news that China is doing very, very well. It's not doing very, very well. Their commercial property sector, as we all know, is in complete shambolic tatters. The residential sector is people are walking away from their jobs. Local businesses, small businesses, have not come back up from the previous COVID lockdowns, and that's impacting overall activity within the Chinese economy. And that's going to impact the West. So yesterday, the markets fell. Not really that much, about 1%, 1.5%. NASDAQ was down, the Dow was down, S&P was down, the FTSE was down, DAX was down, all red across the board on the back of China. Now, they've only seemed to have just woken up to the fact that China is going to impact overall activity when it comes to financial markets. And yet, I've been harboring on about this for months, that China is going to be the fundamental turning point within Western economies. So yesterday the markets are down, and they're going to continue going down. However, they're not going to go down in one straight line. There is obviously going to be a bit of a bumpy road. And the overall markets, just to be absolutely clear, the trend line is still showing a bull trend. So we're not in a bear market. Even though I'm saying the market's going to go down, I'm saying the market's going to go down near term. So all of those viewers who have got a lot of pushback and feedback and say this and say that, this is near term. We're going to see a small correction before the markets pick up and start moving north again. If they do move north. However, if China comes out with more missing the numbers as they have over the last 4 months, then that is going to eventually chip away at this bull market, and the bull market will turn into a bear market. So be aware of that and take that into consideration. Fitch downgraded over to the US. Fitch downgraded regional banks again and warned and gave a warning. Said there will be further downgrades as far as regional banks are concerned. That sent the regional banks down, also sent the top tier banks down. It also said that they may have to downgrade banks like JP Morgan. I'll say it again. Fitch may have to downgrade banks like JP Morgan because the banking sector and the fiscal management in the US is in a pretty poor condition. As a result of that, Fitch, the rating agency, will downgrade regional banks and top tier banks. The question is, will Standard & Poor's also downgrade the banks, and also will Moody's downgrade the banks? Because if they downgrade the banks, then obviously all of the regional bank crisis, which I've been harboring on about non-stop, which everyone thought's gone away and it hasn't gone away, is going to come back and resurface, and it's going to be worse than it is before. So it's not negative news, just to be aware of that. As regards those people who are pushing back on property prices are not crashing and not dropping today and next week. What I've given the outlook over is over the next 12 to 18 months, you will see declines in the property sector, commercial and residential real estate. Even though there's not a lot of inventory, the inventory is limited, but homeowners and home buyers will not be able to move on to the higher rates. At the moment in the US, the rates are running at around about 7.24%. That is the highest it's been in months. The 10-year US Treasury jumped up to 4.2. That's likely to go to 4.50. Make a point clearly, I expect the 10-year US Treasury note to go yielding 4.50%. I want to make that clear for the record. I've already called that 2 weeks ago. I expect that to continue, the yield to rise as far as the fiscal crisis within the US begins to mature, and there will be a fiscal issue whereby the Fed and the US Treasury will have to get involved in order to sort themselves out, which means pushing the button and printing a load of money. Expect short-term volatility, expect short-term markets to continue falling till they stabilize. You could see another 1 or 2% drop within financial markets over the next week or so. We're in a downtrend for the moment. This is Mayor Walensky with Driver Markets. You can share, subscribe, comment, feedback. You can get my latest book on Amazon, Markets Simplified, Financial Markets Simplified, and that's all I've got to say for today. Mayor Walensky, Driver Markets. Have a good day.